Hey guys, Joel Frank here, market analyst for YouTrading. In today's video, we're going to be taking a quick look at a trade idea that I'm monitoring at the moment. It is to do with cable or the exchange rate between the British pound and the US dollar. As you can see, in the last couple of days, well, in the last couple of weeks, since it hit that record low around 103 in late September when there was that sort of fiscal crisis going on with UK Prime Minister Liz Truss's basically failed fiscal plan, we've seen quite an impressive bounce. Like we're actually up, how much are we up from that low? Nearly 17%. So it's been a big rally and it's been gaining traction in the last couple of days. You can see we're about 0.5% up this Thursday, despite thin volumes with the US markets being shut for Thanksgiving. We rallied nearly 1.5% yesterday. And, you know, we even had a big 3% gain earlier on this month on the 10th. And pretty much what's been going on here is it's a dollar story. It's a dollar weakening story. We've had, well, the big move on the 10th of November was because of much softer than expected US CPI data. But we've also had dovish signals from the Fed, most recently in the form of the Fed minutes, which were released yesterday, which basically weren't as hawkish as Powell was in the press conference of the last Fed meeting. Pretty much, Powell's been trying pretty hard to push back against any sort of dovish market reaction because, I mean, the way the Fed sees things is like this. If markets start reacting in a really, really dovish way, stocks start rallying, yields start falling, then, you know, that's an easing of financial conditions, which actually is a boost to the economy at a time when they're still trying to tighten financial conditions in order to slow the economy, in order to get inflation under control. So that's why, you know, Powell, well, that's at least why I think Powell's been trying to come across as so hawkish. But then the minutes sort of pushed back a little bit against that hawkishness. Like there's pretty, and also, I mean, recent Fed speak as well. We've had plenty of Fed speakers speaking this week, and it seems to be that there's unanimous or near unanimous support for the idea of slower rate hikes ahead. So it's going to be 50 basis points next month, and then likely even slower rate hikes after that. And although the Fed's not sure how high interest rates are going to need to go, you know, markets are at the moment thinking that maybe it's going to peak at around 5% next year. And you know, we've got inflation in the US, which has clearly peaked. We've got other gauges of US activity showing growth is slowing. The labour market's still hotter than the Fed wants, but it looks likely that peak Fed hawkishness is in. And that's why the dollar's been getting smacked in the last couple of weeks, really. And that's what's lifting sterling. So what's my trade idea? Let's get into that instead of just going on about the dollar weakening story. Pretty much, we're approaching some key areas of resistance. Okay, so we got the 200-day moving average around 122. Then we got this top from late July and early August around 123. I'm not looking to be chasing this pair higher at the moment. That doesn't mean I don't think it can go higher. I actually think we probably are likely to break above the 200-day moving average at some point in the coming weeks. But what I'm doing is I'm waiting for us to hit resistance, become oversold on the RSI, which we're not yet. We're about 66. You want that RSI to be above 70. Then I'm looking for a pullback, and then because I do believe in this longer term dollar weakening story now, at least for the medium term anyway, because I'm thinking that Fed hawkishness has basically peaked at this point. Which, you know, that could change if inflation trends go back the other way towards being hotter than expected. I'm not wedded to this idea, but for now, I'm thinking the dollar has peaked. So I'm looking for a pullback, probably to this 117 to 118 area. That was a really nice area of support, turned sort of balance area, turned resistance, and then more recently we broke through it, but then it became support again. And also you're likely to see in the next couple of days the 21-day moving average sort of coming into this area, another reason to have some technical support. And then the 50-day moving average is also down here, so you might see that come up to this area as well. So a couple of reasons to have support in that area potentially. as well as potentially some uptrends as well that are going on, although things aren't, technically speaking, things aren't super clear given all this choppiness that we had in the end of September. It's kind of hard to draw definitive trend lines that that everyone else in the market is looking at. I mean, you could have that, but then also some people might be talking about that that trend line. Other people might be talking about a trend line here. So a couple of things to be thinking about. But yeah, pretty much, guys, I'm looking for this pullback in sterling. How much higher do I think we could go? Well, I mean, obviously things of the UK economy are pretty bad, in recession at the moment, very likely. Bank of England still having to hike despite the recession, but unlikely to be as aggressive as the Fed. So it's not a it's not a pound strength story at all, which I think sort of limits the potential upside. But I still think we can get this pullback, then we can have a sustained push above the 200-day moving average. We can get to this 124 to 125 area. Then we could probably even get to the next area, 126, and maybe we can get all the way back to test this key resistance area around 130 in the next couple of months if the dollar is really coming off, which I think it could be. So I'm prepared. I'm sort of preparing for that. So if we do get a pullback, I'll be buying down here potentially, targeting the 200-day moving average and then these levels over sort of a long-term swing trade. But anyway, guys, that's what I'm thinking about at the moment. I hope you all enjoyed the video. I hope you all found it informative, and I will see you all in the next one.